Surprisingly, just when the vaccines are getting rolled out and the economic optimism is back at high, gold staged a recovery. The bullion was the best performing commodity last month, almost recovering all its year's losses. I believe the appeal of gold as an inflation hedge is playing on investors' mind, and many fund managers that I've spoken to are increasing their exposure to gold, arguing that central banks may not really use or hike interest rates to combat inflation, thereby pricking the economic or the money bubble that they have created. So, for all you know, we are in a new paradigm where you will see very negative real interest rates, high inflation, and low nominal rates, which is all good for gold. On the other hand, if you think of it, gold is a safe haven, isn't it? So any economic recovery is bad news for gold. So I was a little confused. I thought I should analyze gold as an asset. And in this video, I share 4 important charts that can help you take a call on gold. Please do watch till the end.
Let us now try and understand if the current gold rally can really sustain. As I was saying, gold has recovered all its 2021 losses and it's currently at $1,900 plus levels, which is great news for gold bulls. What has caused it and what can sustain this is if inflation expectation are on the rise and if the real interest rate, which is nothing but interest rates minus inflation, continue to be negative. Looking at the gap, we believe that inflation here will not be transient and may be permanent, and Fed may not really use interest rates as a tool to contain inflation, which would really mean that the negative real interest rate is for real and for long term, increasing the appeal of gold for the next maybe 2, 3, 4 quarters. The other reason why there was a weakness in the dollar is because, weakness in gold is because there was a strengthening of dollars. If you could see, dollar was going down, right? But at some point in time, when they started doing vaccination and the economy started strengthening, dollar started going up. But just around mid-March, when the other countries and continents started doing their vaccination program, the dollar resumed its weakness. If you ask analysts, as per Bloomberg, many are pointing that this may not really strengthen or weaken up from here, but there all can be a chance that Europe or Germany can come and say, oh, we are growing at a great rate, thereby start making this dollar weaker from here, thereby increasing the appeal of gold. This is an important chart because here, if you could see, the ETFs, gold ETFs, have been selling gold for a long period now, in the sense for about 8 to 9 months now, and even in the month of April they sold close to 270 tons of gold. And if you look at hedge funds, right, we have not seen a level as low as this, holding levels as low as this that we saw in 2019. But the good news for the bulls is that the trajectory is changing, whether it is ETFs or hedge fund, and if there is real demand, it can push up the price of gold too. And finally, how can we not talk about Bitcoin? Bitcoin is the digital bullion. Both Bitcoin and gold are hedged against hyperinflation and currency debasement. But gold bulls were ashamed and were pushed down to the brink when they saw the rally of Bitcoin. It was unbelievable. The so-called bullion buyers or bullion bulls actually shifted gears from gold to Bitcoin. But the good news is Bitcoins have corrected by 40%. People have not seen these kind of volatility ever in their portfolio, making people redeem out of Bitcoin and moving towards gold. If this really happens and continues for a long enough period, we may see sustained high price for gold from here on. So net, it is still not very clear, but we believe that it is one of the cheapest asset class available, going by all the important drivers, and maybe you can consider 5, 10, 15% of your portfolio allocated, but please do watch for newer signs and newer developments, because this is a satellite approach and not a core portfolio approach. Hope you like this video. Thank you.